forexbrokers.net, and we continue this trading academy with another technical video analysis. This time we will discuss oscillators, and mostly we'll cover the most important ones and how to trade with oscillators, but using the standard interpretation, not divergences. Part of the technical analysis of this trading academy will deal with oscillators and trend indicators. Some other part will deal with complex terminology like Drummond geometry or point and figure charting and so on. Some other part with trading theories like the Elliott waves. But again, any trader that ever opened a chart most likely tried to make the most out of these indicators that you have on the MetaTrader: trend indicators, oscillators, volumes, Bill Williams, and so on. These are only oscillators that come with the default settings with the MetaTrader. If you happen to use some other trading platform, then probably you will find some others. The beauty of MetaTrader is, as we discussed on various articles in this trading academy, the beauty of MetaTrader is that you can import custom oscillators into your platform easily and then use them. We'll cover most of them, and on these oscillators parts, because there are so many, we'll split the videos into 3 different parts so that they will not be too long, too boring, and to cover everything. We'll start with the most famous oscillator of them all. This is the relative strength index. Before beginning, I would like to emphasize here the fact that everything that we said here is based on the info that is already in the articles part of this trading academy. I only want to reinforce a bit the terminology. Maybe it is easier for everyone to understand what's behind the technical concepts by visualizing the terms. This is the relative strength index, an oscillator. Like any oscillator, it appears at the bottom of the main chart, and when applied, a pop-up window appears with the number of periods to consider. These are, in this case, as this is the candlesticks chart, the number of periods are the candlesticks that we see here. So on the daily chart, on the Euro US dollar, the relative strength index, 14 periods applied to the closing price. It means that the RSI will consider the closing prices for the last 14 days before plotting the current values. If you click OK, it appears on the chart just like this with the color blue, but you can edit the color as well. Now, the thing with the RSI is that it always travels in positive territory from 0 to 100. It has 2 default levels that come with the standard setting of the MetaTrader, the 70 and the 30. The interpretation of the 2 levels is that every time the price reaches above, or the RSI reaches above 70, that's called a overbought level. And obviously, what do you do when the market reaches overbought levels? You go short, so there's an opportunity to sell. Every time that the market reaches below 30, this is an oversold level, and obviously you try as a trader to go on the long side. So what should be here? Well, normally selling overbought and buying oversold should be the name of the game. Now, in this case, if we went on the short side here on the Euro US dollar, it would have been great because it is from 1.1180 all the way to 1.0977. A nice trade given by a very simple oscillator. The ideal trade for trading currency markets, or if buying oversold here on this move into the oversold territory from 1.0971 staying to 1.1105, a very good trade. But there's a catch, as always. Oscillators that show overbought and oversold territory, like the RSI in this case, they have the tendency to remain overbought and oversold in strong trends more than the trader's account remained funded, or more than the trader remains solvent. What I'm trying to say is that what you see here, this is oversold territory. If you didn't close along here, the market dipped some more. So from your entry 1.1004, it dipped all the way 0.879 before bouncing. And sometimes when the market has trending conditions, the bouncing doesn't come anymore. So overbought and oversold levels, not only with the RSI, but with any oscillator, they work to the extent that the market is ranging. The Euro US dollar did range here for quite some time, while falling overall, in an overall trend in the last 2 years or so, it still offered plenty of pullbacks for it to be considered ranging conditions. For instance, imagine here, this is something like 6 months. If you go on the 4-hour chart and you trade this one on the 4-hour chart, the 6 months range, you will have plenty of overbought and oversold levels. Coming back to the RSI, overbought and oversold are values above 70 and below 30, but they can be easily altered by editing the indicator. If you go on the indicators list, we choose the relative strength index, edit, and we can edit it, the levels, by deleting the ones here or adding new ones. If you want to see or to trade only extreme overbought or extreme oversold, they simply add the 20 level, add the 80 level on the screen, and when the RSI reaches, just go on the trade if you believe that a range is in place. One word of caution here is that always always wait, make sure that you wait for the period or the candlestick to close before deciding to open or close a trade with the RSI. Why? Because, or with any oscillator, because imagine here, this is a daily candlestick. It is in the middle of the day here, and there are still a few hours, several hours until the daily closing. Well, if the Euro US dollar, for instance, dips another 100 pips, it is enough for the RSI to reach oversold territory. But if it bounces before the closing 100 pips back, the RSI won't show that move. You will see that move only on the main screen as a shadow of that candlestick, but you won't see it as the RSI reaching the oversold. So be patient and wait for it. The next indicator, oscillator, to be part of this article is the momentum, a wonderful indicator. Wonderful in the sense that initially it comes with no levels. It travels both in positive and negative territory, but the standard momentum here on the MetaTrader uses the 100, or oscillate above and below the 100 level, but you won't have the 100 level with the default setting. So as explained in the article, what you gotta do is to go and find the oscillator on the indicators tab, edit it by adding the 100 level as the pivotal level, and then trying to define your overbought and oversold levels based on extreme historical values. How do you do that? Well, that's very easy. Zoom out and see where on this time frame, like the daily chart, but you can apply the process on the other time frames as well, where and when the Euro US dollar here reached extreme levels, and then you simply add the levels, and when that happens you go long and short or short. For instance, selling here, you focus on the actual chart, right? Selling here, overbought, oversold, overbought here, oversold, overbought here as well, oversold, overbought, and so on and so forth. So this is one way to use the momentum, and I would like to end this video with the momentum oscillator. But before doing that, something else it is worth mentioning. when momentum or when the market consolidates, if you trade with the momentum on the hourly chart or on the 4-hour chart, you will notice that by the time that the New York market closes or the London market closes and liquidity drains out into the New York session and out of the New York session, you will see the momentum, if it was a bit overbought or a bit oversold, coming slowly towards the pivotal level, towards the psychological 100 mark, before traveling the next day with the London session. Thank you for being here. Let's move on with the second part on how to trade with oscillators with another couple of them. Bye bye.